Genius team, and this is our Wednesday, Genius Wednesday call. I'll keep it simple. I don't really think I would need to be recorded to say, hey, Bitcoin was down a little this week, huh? No, not really. You can look at a chart for that and figure it out. But what I do try to point out is larger global macro points, data points, technical analysis points that I see that can affect positions in commodities, equities, fixed income, or I guess fixed loss in parts of Europe, as one is now locking themselves into the 5th year of negative interest rates, currencies, crypto, blockchain, all the above. So I'll start the and later, one of the brighter people that I've ever met in Ethereum knowledge, Nick Kearney, who's also on the Coin Genius team, should be joining us. So the two topics for today are not why is Bitcoin down $100? I don't know. Not why it's up $100. Don't know that either. Not good at guessing the next second. But what I am good at is looking at things over time and saying there's a significantly higher probability of A happening than B happening. So there, we'll get into it. Here, everyone can see the screen, I'm assuming. This is the S&P VIX 1-year chart. Now, there's another gentleman on who has a little bit better terminology and technical analysis, so I don't know if everyone can see this, but if you can, this is what's called support. Basically, the VIX at 12 has been supported, or on the other hand, guys that continue to sell volatility at 12 usually get a tap on the shoulder from the risk manager within the next 30 days. So this is a year, I get it. Not everyone trades on yearly things. So what does the VIX on a low mean? Equities on a high. What does that mean? People are more lackadaisical. Nobody wants to buy insurance when things are going well, but all of a sudden there's a hurricane in Florida. Everyone wants to buy hurricane insurance. So here, you can see this. This is 1 year. And as we see right here, it's a fairly significant support level. Let's go to 6 months. Maybe some people are a little shorter dated. Okay, so over 6 months, once again, the 12.5 area has been heavily supported, or on the other hand, the sellers are simply exhausted and run out of margin capital to sell puts in the S&P when vols get to this level, because the lower volatility goes, the more options contracts that one needs to sell to collect the same amount of premium. Insurance on equities is low now. Let's see what happened in July. It was 12.4, remained that way for about 3 weeks. Then over the next week, it went from 12 to 25. So those who made a strategical portfolio decision to ensure based on some of this knowledge, either cut their losses dramatically or increase their earnings if they were initiating shorts by significant margin, because the VIX, as well as all options, are leveraged, generally speaking, a minimum of 100x on some things like cotton futures, maybe 35 to 1, S&P options on the futures, probably closer to, at this level, closer to 100 to 1. So one S&P mini contract is $156,000 worth of equities that one controls for roughly $3,000. So let's look at 3 months. Anything there? Okay, well, this looks less supportive, but once again, what did we say? There's one, two, three, fourth week and slightly turning up. Now, I know this is supposed to be crypto based. Who cares? People don't know what the VIX is. It's a derivative on the S&P 500 that options market makers, which I did a long time ago, at the Chicago Board Options Exchange in Chicago, which I was a long time ago. Calculate this based on their implied values of what volatility will be if the S&P is a certain price level. Let's look at just a 1 month chart. Okay, well, here I guess it becomes more obvious that 12 this month was actually the low and 13.5 was the high, so not extremely volatile, but I still have yet to see this barrier on the downside be broken. And I guess when volatility, something I've traded in for 20 years, has worked significantly more than 51% of the time, it's something that I would simply urge people to take a look at. Make yourself familiar with the VIX and how it correlates to other things. And as other asset classes such as cryptocurrency or blockchain become larger, they become portfolio positions in larger books with funds, family offices, financial institutions. So a rising VIX, sure, some people say Bitcoin's a hedge, some say it's not. I don't know. Couldn't tell you. I'll tell you once. Depends on how high the VIX goes. VIX going from 13 to 14, it's what you can call a Q trade. VIX goes from 12 to 24, it's called I just made my year trade or I just lost my career trade. So the next chart should be Bitcoin price, right? No, we don't really need to talk about that. It's fairly self-explanatory. So what I wanted to highlight is the second largest asset class in blockchain, although not a cryptocurrency, a smart contract called Ethereum. I'm going to guess that many are familiar with it, but if not, it's a blockchain-based smart contract which is mineable, and it's the second largest market cap asset in this space. Okay, why is he not showing a dollar amount? Well, because since Bitcoin represents close to, by some metrics, 65%, by other metrics, closer to 90% of the US dollar price in all of blockchain, there's little added value in me simply showing you a chart where the price has dropped a few $100s this week and was up a few $100s last month. But what I felt was more important was showing how the number two asset in this class, which really is not super similar, but that's where I would bring Nick Kearney into the discussion. But let me finish with the charts and I'll expand further. So I'd like people to look back at November on this surge down from, I know it doesn't look like much, but that was from 0.032 to 0.024. So Ethereum lost 25% or more of its value in late 2018. Now, let's take a look at what happened to equities then. Well, we don't have equities, but since we know what the VIX does, we'll see that this actually tracked the VIX. So Ethereum performed very closely in times of turmoil to how the VIX performed. As we can see here, move from 22 to 15, almost the same percentage move down. Then the VIX spiked, and let's take a look maybe I mean, you couldn't possibly have had something like Ethereum going up when the VIX was going up, right? Let's take a look. Oh, wow, it actually was. That's interesting. I know many people probably didn't look at that one. Maybe they did, maybe they didn't. I don't know. So where did things go wrong this year? Because clearly one can see 1 year ago, one Ethereum contract was 0.031 Bitcoin. Now it's 0.021. So Bitcoin has gained against that. Let's take a look. Does the VIX tell us anything? Well, the VIX was 20 and now it's 13. So by my accords, that's a loss of about a third. Let's take a look at something in Ethereum versus Bitcoin. Maybe there's some correlation there. So 0.031 to 0.021, and we'll do that on a calculator. 0.0216 divided by 0.031. Oh, so it's dropped 31%. Let's do the VIX. 0.129 divided by 0.201. 64. Definitely not in total correlation, but I would say that there's one there. It's also another brilliant data scientist on the line. Well, probably more than one, but Thomas, I don't know if he's on at this moment or not, but Thomas Peppers, also a member of the Coin Genius team, one of the smartest data scientists I've ever talked to. And he's also involved in technical analysis. He may be able to expand a little bit on his thoughts there. Let me finish up. So, what is this telling me? Well, I can look at the low in Ethereum versus Bitcoin made in September of this year. Let's see if there was anything going on in the VIX. Maybe. Oh, wow, that was the highest point the VIX was at in the past 6 months. So that kind of doesn't totally work. But I'm going to stick with this and show you my longer term theory on this. So S&P or VIX has been over the past month to fairly tame, and as we see in September, the VIX was higher, so Ethereum Bitcoin should have been higher and should be going down now, right? So let's take a look. Has it been going down over the past few months? Oh, wow, it's been going up after the past few months. So we've had a change in correlations. So let's take a look. Maybe people could have taken the Bitcoin dominance thing a little too far, maybe a little bit crowded trade, and people are realizing that even at 0.0216, maybe something like Ethereum isn't exactly expensive. Let's look over the past month. Well, it looks like somebody really tried to take it down about a month ago. Nasty move. And wow, it's recovered and taken out that high. Well, that would be a bullish signal. So these are my two pairs, if you want to call it that, that I wanted to talk about. And I know that comparing the VIX to the Ethereum Bitcoin pair is probably not one of the most looked at relationships in capital markets. And I would agree, it's not. But what I try to do and what I've done successfully for many years is look for drivers that everyone else isn't looking at. If I was told a long time ago that if everyone's doing it, you usually want to take the other side. So, on that note, I would open it up for Thomas, Tim, Nick, or anyone to essentially add anything on my thoughts or on technical analysis, on Ethereum versus Bitcoin, on the VIX, on US equities, which is obviously the anti-VIX, or anyone else. So that would be my brief presentation, or I guess thought-provoking interpretations.
Thomas, are you still with us?
Let's see.
Okay. Carl, are you still with us?
Wow, I
Yeah,
lost
I'm here.
everyone?
No, I have a feeling most folks were on mute thinking we were just going to chat for the whole hour. So Carl, you have a bit of experience with VIX and kind of watching volatility indicators. What are your thoughts here to what Steve's laying out?
I don't have a ton of volatility experience, but my feeling with what Steve's laying out is the support and resistances I think are super important to recognize here. And I mean, especially if something's held over time, I think it's something to not ignore, you know?
And I would also add to this that because of how Bitcoin has performed versus the great majority of other blockchain and cryptocurrencies this year, where we've seen Bitcoin, up 100%, 200%, and Litecoin down, or, other top, multi-billion dollar projects are negative on the year where Bitcoin is positive. I actually talked to a gentleman earlier, and I know this is probably not one of the most widely accepted beliefs, but when I hear someone saying that, yeah, we're going to open up a fund with 100 million or 500 million or a billion or whatever, more than one lot Bitcoin traders, I guess, for lack of a better term, and they're announcing that it's going to be a closed end or something fund of a billion Bitcoins. That might be bullish. It probably already was because, they bought, sold, rebought, and now they're marketing it or whatever. But if that's it, that is not, in my opinion, bullish, because you're essentially, somebody buys 2% of the Bitcoin market, puts it in cold storage. It actually just increases volatility. And I guess with today's metric, where some volume can be questioned, I'm not the one to say what is real or unreal, or versus two different parties or versus two accounts in the same house. I don't know. I mean, no one watches every single market. And I'd be highly confident in saying that even someone like Bitwise, who I respect highly, no, they prepared something that is widely respected in the space, but they only chose a certain number of exchanges, where I guess I looked on CoinMarketCap today, and this is kind of off on a tangent, but I'm just going to go with it. I looked at some of the top 10. I'll actually pull them up right now. This is from coinmarketcap.com. And I'm just going to pull up sorry, I'll do a screen share again. I'm going to rankings by adjusted volume. And I look at today's top 10 or even top 20, and many are not the household names that were there in the start. And that's cool. Like, it doesn't mean they're good, bad. It's, you know, people obviously, some people feel more comfortable at these exchanges. Like, things change. I mean, we don't drive horse and buggies to work anymore. I don't think, at least where I live. But, you know, BitThumb, CoinEgg, Biloxi, P2P, B2B, Cat.x, MXC, Fat BTC, IDAX, I mean, this is what CoinMarketCap, a widely respected and very well watched site, is, you know, showing. So I've looked there. I tend to, you know, I respect them very much. And these are, you know, I don't see Binance. I don't see Bittrex. I guess I'll continue to move. And I mean, I see Binance at 26.
You're telling me LA token outranks Binance?
No, I'm
That's
simply saying by whatever metrics CMC is
right,
using
right,
their
right.
calculation,
Based on
it does.
CoinMarketCap's metrics of rankings, it does. And I would also like to point out that you're looking specifically on adjusted volume. And for the folks that don't know, that adjusted volume is the exchange's reported volume, then run through Blockchain Transparency Institute and other algos to identify wash trading, eliminate the wash trading, and then that becomes the value adjusted volume. So what you're looking at is exchange volume minus the wash trade, in theory. Now, CoinGenius is working to validate all that and show these rankings and why they are the way they are. But these are one of the many, many data points that we're looking to quantify.
Yes, and that was going to be my lead-in, that, you know, the Bitwise report, it's great. It sheds some light on, you know, things that there may be some issues with volume. Like I said, I'd be hard-pressed to say that anyone is on everyone's screen at all times and can tell exactly why someone did or did not do something. I don't know. I guess when I looked at this in the past couple weeks, there's a lot of new faces. You know, that doesn't, I mean, Tesla was a new face 10 years ago. Not many people, if you said Tesla, they didn't know it was an electronic car. Now, if you say Tesla, it's kind of synonymous. I mean, in the 1998 NASDAQ surge and then not surge, this little fruit company pretty much got overlooked. You know, I guess a lot of people thought it was just an apple orchard or something. Turned out to be this technology company called Apple, and 20 years later, they're the biggest company in the world, and many of those that had once been 1,000 times mightier in terms of market cap have since gone by the wayside. I don't know if a lot of you guys use
Absolutely.
Excite or Lycos for your web searches on the World Wide Web, or if CMGI is still the biggest internet incubator, or if fiber optic is still going to change the world, and if JDS Uniphase and SDL Incorporated are still 100 to 200 billion-dollar companies. I haven't looked. I couldn't tell you. I'm sure they're all doing well in some way, shape, or form.
Right, but to your point, there's an evolution. There's a Darwinian part of this landscape where, you know, the ones that are doing well tend to get bigger.
I mean, like, let's take a look at, I'm just saying, Binance is doing $700 million of volume. That's great. Like, by any means, I mean, that's tremendous volume. You know, CZ and his team have brought blockchain to a different level and to many users that probably would never have heard about it, and, you know, been one of the forefront leaders of an exchange to be visible. I mean, he's, you know, definitely someone I'd love to meet and talk to. I mean, what he's done will be, you know, is revolutionary, is and will
Absolutely.
be. So I'm not trying to point any fingers. I'm simply commending this, I guess, industry that, whether some is real and some is fake, look, I can tell you, there's some quote unquote real and fake trades in the S&P 500 every day. There's some real and I guess questionable volume trades in the US Treasury futures too, or in any equity. I mean, it happens. Maybe it's a mistake, maybe it's not. I don't know. No one does. No one can check every single thing. Maybe it's an accident. I don't know, but I think that when you start to see all these new faces, instead of this industry coming at them like, oh, that's a fake volume. What's fake? If someone needs to get out and I don't know, and they have 1,000 Bitcoins and they have them on CoinEgg and they sell them for $200 less than other exchanges, maybe they didn't have the time to transfer them. Maybe they only like using it. I don't know. Guessing on why someone did what, I don't know. That's
Yeah, I
probably
think
a
it's
better question for the Coin Genius artificial intelligence engine than me. But
Well, I'll tell you a little bit about Coin Genius's crawl, walk, run plan, and that includes, taking all of these exchanges here and, to your point, identifying the people behind them, identifying the external projects, identifying, their philanthropy concepts, and being able to show, that there's a real face behind it. Also, to your point, the data is the data, whether that is wash trading, which essentially is like pumping up, or it looks like overinflating. But what it is it's trading the same thing over and over and over again. So it looks like more trade volume, but less movement. All of that's data, and all of that makes a difference in the market. All of that makes a difference to how traders look for opportunities. So whether you have a moral judgment on anything that's happening, it's good to always have the data of what's happening at your fingertips so you can make a judgment. And that's what CoinGenius is doing in the crawl stage, is gather all the data and make it available. People can start drawing correlations. And the walk stage is we're taking our correlations and making them public, and you can draw more correlations. And the run stage is we run AI on all of that. And, essentially you get a window into the future. You start to get some predictive models and some crystal balls, and they're not right, but the intelligence engine can, start to say, well, you have a 56% chance of it being right based on these indicators and past performance. And that gets very, very technical. But yes, we're trying to do all of those things.
And I'm just going to briefly click on these. Now, this is by reported volume. Okay, actually, I can't say I'm super familiar with either of these, but so this is probably I'm not familiar with Firma Chain or Orb, so this is not the best one for me to pull up. But I guess when we look
I
at
found it
something,
interesting that your P2P, B2B exchange is on there. You've mentioned that one several times, and I found it surprising to be so high on the list.
oh yeah, P2P, B2B. It was. I'll be honest, that was one where a year ago I had not heard of them. Although we can see they were launched almost 2 years ago, and it was by sheer luck I was helping a project and helping them get listed on some exchanges, and we crossed paths, and the rest is history. It's a small project that's on there, and I guess betting sometimes the small projects that bet on the small exchanges end up leading to bigger projects on bigger exchanges. But the
Let's
commonality
unpack
in
that. Steve, let's unpack that a little bit, especially while we're waiting for Nick. I think that metrics around exchanges and an analysis around exchanges of what you look for, what tells you a story. What is it that you look for when you look at charts, right? But I know you also look at other metrics about exchanges and comparing them, and comparing performance, and you see opportunities there. Tell us a little bit about what you look for so I can think about the metrics I need to monitor.
well, I guess I just simply look at the active markets. If I'm someone interested in doing something in Litecoin, this is for lack of a better term what I call the Litecoin exchange. And you can see their top 3 volumes are in Litecoin Ether, Litecoin Dollar, and Litecoin Bitcoin. So whatever you choose to prefer prefer to move your Litecoin in and out of, this is probably a place that's worth looking at. Maybe you're there now, maybe you're not, but yes, it's worth looking at. Now, when I go to other exchanges, and you'll see this, I'm not familiar with Firmachain or Orbs, and Bithumb is located in Korea, hence why the Korean won, KRW, is one of its primary trading pairs. Notice here we don't see USD at all. I'm going down through the top 102 and don't see it at all, where many, with this one exception. So if people that is their native currency, that's obviously a place of interest for them. Let's take a look at Biloxi. What is the obvious is Bitcoin, Ethereum tend to trade first and second place in terms of volume, and Tether or some USD token tends to be its trading pair. And I think even before I joined the Coin Genius team, I told Christina, when I first saw Tether outtrade its daily market cap on a one-to-one basis, I thought that was amazing. I'm gonna switch gear to
Hey, Steve.
yeah.
One thing that just occurred to me. You probably could speak to it much better than I could. I'm really fascinated by the minimum tick for a lot of these exchanges. I remember on Bitfinex, it was one of the first exchanges that I was on, where it was following the, I think, 2001 stock rule, where if like the asset is trading under $1, it goes to like 1,000th of a penny, maybe. And then whenever it's trading above $1, it is the smallest tick is 1 cent. I remember, so that's something I'm really fascinated about that I personally like to look into, especially against base fiat currencies, is what degree of decimalization do they allow? Because that has such a great effect on liquidity and arbitrage
Yes,
opportunities.
I would agree with you. I'm fairly familiar. I've done a couple transactions on P2P, so I can tell you, for instance, right here, the minimum interval is, let's see, actually, I'd have to log in and whatever, but it's 0.0001 Bitcoin, so 10,000 Satoshi, and that's $8.50. So I can tell you that in their Bitcoin pair, it's $8.50 minimum interval. In their Ethereum pair, it's 0.01, so that's about a $2 minimum interval.
Yeah, that's
And
fascinating.
in
I know.
their
I think like
tethers,
gold, it's
it's,
like a quarter or something.
I'm sorry?
I think gold, it might be gold futures. I think it's a quarter.
Oh, gold? No,
Isn't
that's 10. It's actually, gold is 10 cents, and silver
gold
is,
futures?
yes.
Okay.
Here, I'll show you. I'll pull
No,
that
that's
up.
fine. I definitely believe you. I just know,
Oh.
yeah, you're right though. I just know, like most commonly stocks, it's a 1 cent, it's 10 cents, it's a quarter.
Oh, I
Things
know
like
what
that.
you're talking about. The thresholds, if something 0 to 5,
It's like the
then
tick, like
you
the
can't trade in a smaller interval. I myself am not an individual equity person, but I'll just show you, for instance, there's a large exchange that people may or may not heard of. It's definitely, I consider them the best of the best. It's called the Chicago Mercantile Exchange, which also encompasses the NYMEX, the COMEX, and the Chicago Board of Trade. So pretty much if you want to do futures and have not heard of the CME, it's definitely worth going to cmegroup.com, as they're definitely a leader. And here, I'll give you just gold futures, for example. It will tell you
Hey, Steve, I'm going to jump in as well and just let you know that Nick Kearney has joined. So I
Okay.
know we don't want to go too far down here, but
Okay.
Thomas, I love the question around tick architecture. And as you're moving intervals, I think that that's a really important piece for the math behind all of this. So definitely excited to unpack that.
Okay. Here, Nick Kearney. Hey, Nick.
Yo, what's going on, everybody?
All right. Hey, Nick, I want to show you. I don't know if you were here earlier, but this is the S&P VIX. So just note, a year ago it was 20. It's moved up to 35 and subsequently has formed a significant support level at the 12 area. This is the inverse of the S&P 500. Now, when I met you in Las Vegas, you definitely knew a lot more Ethereum than most Ethereum-based questions that I had than most people.
Right.
So my point I was trying to make today was looking at Ethereum versus Bitcoin. So this is Ethereum in only Bitcoin terms. The charts during the subsequent surge in the VIX or fall off in equities, Ethereum strengthened. So despite many, this year's Bitcoin dominance thing, then Ethereum has since formed a bottom. And I guess I'd love to hear your thoughts on Ethereum, I guess, as a product, as something of the future. And, the floor is yours. The topic is Ethereum.
So your
Or
question
anything
is,
else you want to go through, Nick. I know you have things to share.
I do. I'm also currently walking around my office looking for a charger. But so basically, I guess your question is, you're asking why is Ethereum acting the way it is amongst all this other stuff that's
Well, I
going
guess
on?
I'm asking, I would open the floor to you, where many are like, oh, Ethereum's done this and that. And I guess since many of the listeners may not even be familiar with the term blockchain, they only know cryptocurrency. I
Yeah.
guess I'd start at square one, and you could probably more eloquently than I explain to them how Bitcoin and Ethereum are different. Like almost like
I
we're
see.
talking.
Okay. Yeah. So basically, they're completely different things at all. Bitcoin is the equivalent of cash or money or a US dollar. It's something that you can value, right? But Ethereum is a little bit different in the sense where it was never intended to be a currency. It was never intended to be something where I give you this much and you give me something like an apple or so and so. It is actually a service. It's a tool set of features that is most easily comparable to the equivalent of a database, tables and rows and columns with data in it. The only difference between a free database, like maybe use PHP or MySQL or something, as opposed to Ethereum's database, quote unquote, is the fact that it comes with a lot of these out of the box features and functionalities that developers can take advantage of, that are so valuable that it's worth paying the network fee in which to access the Ethereum database. For example, if I am a company that does something and I could either choose to store my data on a regular database or I can just choose to use Ethereum as my backend protocol, why would I do that? And what advantages does it have as opposed, why would I pay that 0.2 cents every single time I want to call data or store data? Well, I mean, the obvious ones are it's an immutable database. It's never going to change. So we know that. But it also comes up with these other kind of like function calls, like go get this or display this or transfer this. And that set of tools is like if you were to use Oracle or you're to use Adobe Experience Manager or you're going to use some kind of microservice or any of these business to business software as a service kind of code sets or storage architecture. It's just very useful. And these functions that come out of the box are so useful, in fact, that it's worth paying, 2 to 4 cents every time you need to do something. So when you're talking about the difference between Bitcoin and Ethereum, where, like we said, Bitcoin is more of a currency, where the only functionality is you trade it for something else. And yeah, Bitcoin's a little revolutionary in the sense where you can write your code into the transaction as opposed to like, hey, I want some apples. Here's a dollar bill, and I'm going to hand it from my hand to your hand. Now you can use some kind of logic to say, if Apple this, then transfer that. But Ethereum takes it to the next step, where it's not just about trading goods and commodities. It's about building networks and trading data and trading infinite amount of things on a hyperscale that's just like brand new. So then now it becomes almost like new age oil, like a commodity. So where it's like we have all these cars and all these tanks and all these war machines around the world, and they're all powered by oil, which, obviously I mean, to explain commodities to you guys, but it makes oil valuable. And we stopped, we started using renewable energy or something, then, the oil doesn't get as valuable anymore. But this is the same thing. There's a finite amount of Ethereum. There's one network blockchain, and there's all these companies, all these new apps that want to start storing their data on the Ethereum blockchain, which, the more popular it gets, the more the fees cost. But to sum up, your point is the difference between a coin that was intended to be a currency and a protocol or a database that was intended to, sorry, walking around my office avoiding people, that was intended to be a network or a service or an Oracle-like experience, where now we can start building applications on. You can't really build an application on top of Bitcoin, right? You can build a cool app and then use Bitcoin as your mechanism of transferring. Maybe you won a sports bet and you get paid out, or you paid for a freelancer to write something and you pay him in Bitcoin. But in no way is the system dependent on the Bitcoin. It can easily be swapped out for US dollar or PayPal, as opposed to where Ethereum, your whole application is dependent on Ethereum as like the underlying code base, like you're using JavaScript or PHP or all these different things. So now we're able to essentially rewrite a new internet, a new series of technologies that is completely different than Web 2.0, which is the current version of the internet that we're using right now, which is much more centralized. So to answer that question, when you're looking at a coin like Ethereum versus Bitcoin, when you invest in one or the other, when you're investing in Bitcoin, you're investing in the idea that the US dollar is going to go up, or the Bitcoin value is going to go up, because it's popular. It's a popular currency to use. But when you're investing in a coin like Ethereum, or even, dare I say, Tron or Steam, or some of these other coins are just simply underlying protocols to write other applications on top of that gives you more advanced functionality and features, then what we have is a coin that potentially isn't just one application, but it's thousands, if not billions. Look at the Apple App Store. The Apple App Store on your phone is essentially a blockchain in its own kind of an analogy of a way, where if I were to invest in Apple, then you're investing in the Apple App Store. If there was Apple coins, I'm not just investing in Apple. Apple gets a cut of every single app that makes profit. 30% actually of every transaction that happens on their apps in the App Store, right? So that means Apple is now if they have 1 billion apps in the App Store, you're now getting 30% of 1 billion apps, as opposed to just Apple. And that's what kind of Ethereum is. It's like an app store. And if you invest in it, you're investing in every single app on that app store. and all
Nick,
it
can I
takes.
jump in on that one
Yeah.
just to expand that slightly further?
Yeah.
What if you're investing in Apple? What you're investing in is not only their technology competency and the ability to have this device in your hand, you're investing in their entire digital infrastructure and their technology competency to be able to expand that into other industries. That is what he's talking about here about Ethereum. They are creating. So if Apple, to Nick's analogy, Apple would be a centralized blockchain, which is not a thing. Blockchain is decentralized, which is the cool part, but the infrastructure is inside with Apple. The cool part about blockchain and the cool part about Ethereum type projects is that now becomes decentralized and that suite of tools becomes available. And he's talking about building on a platform that could potentially be, billions and billions of apps. It's one giant digital infrastructure.
Christina, this is
Yes, sir.
Steve. It's interesting when I hear the term centralized and decentralized because I guess it has different connotations to me. Like, to me, a centralized office would be if all 1 or all 10 or all 100 Coin Genius people literally went to one office every day. And I guess
Correct.
in
And
my
if all
mind,
packages had to be picked up from that office, if
correct.
everyone had to go to that office in order to ever interact with it, you have to go to that office.
So
That's
hear
what
me out on
centralized
this.
means.
I guess an analogy to me is, say you had Bitcoin, Litecoin, two large cap assets, digital assets. Like, you're buying them and two things are happening. Either prices up or prices down. Like, that's really what I'm betting on. I'm betting on the math behind that blockchain or that cryptocurrency for it
Yes.
is what they're cryptocurrencies. Now, what
And
I've
that's part
noticed
of what I'll shut up. Go ahead.
and this is kind of the, I guess, mind jogging question for any and all that I would pose is, as we move from, the Satoshi vision, which was in 2008 when, mind you, when he came up with that original, the sky was falling. That was Dow 3500. Like, that was Merrill had blown
Absolutely.
out, AIG had blown out, Bear had blown out. Things were, you saw
The
your
world was
neighbor,
not the same. Yes, it
losing,
was
going
catastrophic.
bankrupt. It was a brutal, it was a depression, but there was money printing. So I think, and I guess something like Ripple, or I think that blockchain is kind of like an idea where if I say, I'd like to buy television, you might think, okay, well, Steve's grammar all of a sudden got poor, and you'd say, go to Best Buy, go here. I go, no, I want to buy television. You're like, okay, dude, go to Best Buy. I say the third time, I want to buy cable. You go, okay, go to Comcast, but the thing is, I can't buy cable. I can't buy cable, all of it. I can't buy every
Right. Now
coax
you're talking
cable,
about the
every fiber
tokenization of things.
optic,
Yep.
every box, every radio wave. Like, you can't buy internet. But I would like to buy internet. Okay, go to Amazon. No, I want to buy the whole. You can't. That's what. I don't think you could buy. I think every single coin has had a coin burn by people breaking their phone, losing their computer, spilling coffee on the mainframe or whatever it was back in the day. So the decentralization, I feel like that's great. Some coins and projects want to be that. That's cool, man. Like, I think sometimes people go with the Satoshi vision as there's one way, and I think down the road people will be more appreciative that it's like, okay, here was a vision of doing something called a blockchain, and it's like, wow, it's being used in cryptocurrency, it's being used in decentralized blockchains, it's being used in smart contracts, it's being used as a payment mechanism, it's being used as a database. Like, all of those are viable. I don't think we'd be having this conversation if all we thought was every coin, that was the 2016 white paper. We're the next Bitcoin. No, dude, you're not. You're not the next
Right.
Facebook. You're not the next Bloomberg. There's one and one and one and one.
Right.
We
And
could be
now
the
it's a
next coin
landscape. I
genius.
totally agree.
You can
No,
be
they
the
cannot.
next
No,
smart
there's only
contract,
one coin genius.
but you're not. There's not going. You're not the next Ethereum. They were the first, or I
Correct.
believe. Like
So
that's
there's
it. You know.
I love where you're going with this, and I think that it speaks to Coin Genius's, need to quantify all of these kind of things. There's an article that I recently posted on my personal LinkedIn, but I'll share it through Coin Genius as well, so that folks can go back and take a look at it. But it really lays out the entire landscape. And to your point, all of these are good use cases. All of these help save time and money for companies that have to innovate and they have to save time and money. And this is the start of this AI revolution. And unemployment tends to drive recession. So we're keeping an eye on all of these things. But as more companies outsource and take advantage of these technologies, the world will change and that landscape will shift. But the applications of blockchain are seriously limitless. And we haven't even started talking about supply chain and optimization and carbon neutrality. And we haven't even started talking about putting that together with smart contracts so that when a ship crosses a certain point in the ocean, the contract is now engaged and the money is deposited, and all of that is automated and doesn't require 2 to 4 weeks to now process and end up in your bank account. And it allows people to do business at the speed of now. And that's how this technology changes everything. CoinGenius is going to be there to identify and it kind of help explain, this is what you're looking at, this is what this does, and this is how, you make your own decisions from there. But this is a very complex landscape, and it'd be nice if someone at least color coded it.
Yeah, it would be nice. But
Nick Kearney,
that's where we're
I'd
at
love
right
to
now.
turn the floor back to you, sir.
Well, that's kind of where we're at in the life cycle of this right now. Is we're in confusion, fog. Most people that are in it don't even understand it, which drives it in the wrong direction in its own right. And that's kind of one of the cool things about CoinGenius. It's kind of like this validation system on top of all of our analytics. Like, yeah, we do our trading thing for the money people, but I mean, this conversation is where my interests really are, because like realistically, that's what crypto is. And I predict in the future it's going to move away from this stock trading kind of vibe, that we're
for sure. Fintech is just the first big driver. There's real estate. There's so many other things that are going to be drivers as well.
And honestly, realistically, probably what's going to happen is it's just going to be kind of fade into the back end, and we're not even going to notice its integration. The most people probably won't even know it exists. It's kind of like the Visa thing. Like, you have your credit card and you swipe your credit card and you get money. But if it was on the blockchain, it'd be so much more effective. So Visa goes and they put it on the blockchain, and you go swipe your credit card and you get money. But like, you don't know. You have no idea. Like, nothing changes for you. And I think that's where a lot of kind of blockchain tech is gonna go. And I think a lot of it, the other half of that, is gonna be like for show, like companies just kind of like bragging, like, yo, we put it on the blockchain, and then that's a lot of like the visibility you'll get from it. But I think the industry itself is definitely subject to a lot of risk of the big evil corporations coming in, just eating it and just doing what they will with it, and then everything's just out the window. I always said blockchain is the people's last stand against the fight of the corporate overlords and tyrannical governments. But can we win that fight? Probably not.
Will we try?
We will try, but
All right, Nick, that's a downer. All right, I'm still gonna try.
I do have a couple things to show. I got like a few minutes before I can go.
Yeah, all the folks that are due for the next meeting are on this call. So guys, we'll just defer it out 5-10 minutes so that Nick can present, because he's got some really cool things to show today.
So I'm gonna share my screen. The first thing I want to share with
I'm
you
glad
guys,
you're able to find your charger.
Yes, I stole someone off their desk. So the first thing I want to share with you guys is I got sick of waiting. So I built this. Oh, I don't have. Let me see if I can switch over to my guest access. I forget I'm on a black or firewall internet right now.
Well, we can see what Nick's eating for lunch, clearly.
That are going to
Sorry,
be integrated.
bad joke.
This internet is much more poor, so we'll see if I can't. Oh, there's the beeper. I don't know if I can maintain this call and
Okay.
75 tabs. Let me see if I can't. Well, you guys can go to this on your own leisure. I don't need to present it. I'm going to put it into the. I'm going to get back on my. See, I got kicked out. I have to get out of this meeting. Whoa, endless loop. I'm sorry for my lack of logistic convenience in this meeting, you guys, but I'm just like bouncing around to different meeting rooms trying to. So there's 2 pages you guys can check out. There's the shop page, which I set up, which is basically our subscription page where people can go in and actually purchase different packages for CoinGenius. And then
I'm pulling it up now.
you know, that's the worst, you guys.
I think we lost him. Hey, thanks, Steve.
All right, I'm calling it time of death 11:01.
I think you're right. All right. So that was a bit of a fizzle at the end of it, but we'll do a quick wrap up here. So, Steve, thank you for the analysis. Thomas, thank you for some of the data science conversation. That was very helpful. And Nick, thank you for the Ethereum overview. So we'll wrap up for today. Thanks, everyone, so much for joining, and we will see you next week.